Hi, it's Matthew Cassidy, Managing Director. Welcome to the Markets Update in the first month of 2021. I'd like to cover off today a bit of a summary on how 2020 ended and give you some thoughts on markets into 2021 for what will be, I'm sure, another very interesting year. Well, 2020, what a year it was. We saw the markets really come to a low point on the 23rd of March, and then really since then, a pretty substantial jump in markets to end the year, only really slightly down from where we started. So what actually played out, clearly there was some substantial government support around markets to ensure asset prices were sustained following the COVID crisis. We're certainly not through that, but an unprecedented level of spending by governments ensured that markets recovered and asset prices also recovered at pretty decent levels. As a result of that government stimulus, we've then seen asset prices jump to levels that are historically certainly not cheap and getting toward the more expensive level. However, with where interest rates are around the world, with most economies facing zero or negative rates, is this the new norm? And that's things that a lot of asset managers around the world are actually questioning, and a key issue as we head into 2021. So how do we see 2021 playing out? Well, certainly there's some asset classes we prefer into 2021 because without doubt it's a question of how much the government's going to continue to stimulate and support the economies. Let's focus on Australia firstly. What have we seen happening in the domestic economy in the last 12 months? We've seen some really substantial tax cuts. Households with incomes of $250,000 to $300,000 are at levels of tax cuts of $12,000 per annum. And that scales down there for other households of $10,000 and $7,500. In addition to that, those households with debt have also seen record low interest rates. We've also seen Centrelink support to many households around the country and $60 billion not being spent on international travel. In the first couple of weeks of the year, we saw a record profit from JB Hi-Fi, as clearly people are using that extra cash to go out and update TVs, other appliances, as they're spending more time domestically. We've also seen other lifestyle assets such as boats, jet skis, motorbikes and luxury cars also performing very, very strongly. So we believe that the domestic economy will be relatively robust this year. However, it will depend on the recovery and the opening up of borders as a result of COVID. It will certainly be an interesting one to watch, but at this current point in time, we're relatively confident the domestic economy should be relatively robust. We also think that the Australian property market should hold up nicely, more a reflection of where interest rates are at, as those people who've been thinking about buying property, it is so compelling now to put your money down with some government incentives and to buy property. Internationally, it will certainly be another interesting year. Mr. Biden's taken the helm as the US president. He's certainly going to be implementing his new policies, and certainly around sustainability and the environment will be a very large push. Interesting to see how that plays out in the materials sector. Also, the emerging markets that probably haven't performed as robustly as the global techs certainly should be a very strong performer into this year. So what are our favourite asset classes? We think the Australian economy should perform relatively strongly this year. Emerging markets is certainly an area we like, in addition to international investments. Watching the currency very closely, obviously on an unhedged portfolio, a rise in the Australian dollar will hurt, but it will be interesting to see how that plays out towards the end of the year and whether we see the Australian dollar at 78 cents higher or maybe it'll pull back again. But again, I think the key thing is to speak to your advisor, understand how your portfolio is positioned. It's certainly not a market where you can just jump in and expect to make gains. You have to be very selective and very active with portfolios. We'll look forward to further updates during the year. Thank you very much for your time.